right, now let's get straight into it. With so much volatility in the market, the VIX index up some 62% overnight, and uncertainty when it comes to the pandemic, you would think the traditional safe haven of a gold trade will be very much in play. But is it? To take us through his thoughts on all things precious metals, let's welcome long-time precious metals trader Greg Rubin from Global Prime joining us live in the studio. Greg, welcome to the show. All right, so give me a base case when it comes to trading metals in this uncertain time.
Firstly, thank you for having me on the show. It's a pleasure to be here. I'm incredibly bullish both gold and silver on a macro basis. I think we still have significantly higher prices to come. And ideally, I'm looking for an initial price target around the 2,150, 2,250 level for gold, and ideally around the 2,400, 2,500 zone before we see a sizable pullback. Now, silver's at a different juncture to gold. Silver made a significant low. Prices from the corona low, we saw prices that we hadn't seen since 2008, where gold was just a little sort of pullback in its current uptrend. So silver, I'm ideally looking around 31.5, 34.5 level. And if we see that, I would anticipate a pullback. And that pullback, I think, will be an incredibly good buying opportunity. Before the corona low, we saw the market sort of pushing higher, and we got a spike lower, which I've labeled from an electrician perspective was a fourth wave. I kept my charts nice and simple so that people would understand. I appreciate not everyone are electricians. But essentially, the pullback that we saw got bought up very quickly, and we moved almost in a straight line towards when we topped out in August. Now, what gold has done since the move that we saw in August has very much been in a holding consolidation pattern. And I do think from an immediate perspective, I'm not confident that the November lows won't get broken. I do think in absolute immediate perspective, we could still see one more bout of weakness, perhaps shake the tree, perhaps get that sort of sentiment that's needed for a bottom. But whether we get that or not, I do believe as long as that 1,645 level holds, we should see price targets towards the 2,150, 2,250 level. Now, as a trader, of course, I always want levels where I'm wrong. I want to know to make sure that my thesis where it's invalidated, and that 1645 level I really would like to hold. Below there, we got around the 1560, 1570 level. And for me, if that breaks down without getting a higher high, I would start to be concerned that this market may have a truncated top. But that's not my expectation. I do expect the support zone to hold. And if we do hold the zone, I do think we should be on our way towards the 2,150, 2,250 level.
All right, so when you're using this type of strategy, the Elliott Wave strategy, when your positions are in the red, how do you use it to cut when you know that you've gone wrong, say?
So that's one of the best parts that I find about Elliott Wave. I know some people like the predictability or the ability for it to predict markets. What I love about it is it gives you a roadmap, and it's, I've been involved in various forms. I've dealt with various forms of technical analysis, and the part that I like best, and the reason I adopt Elliott Wave, is that it gives you clear invalidation levels. So before I enter any trade, I know exactly where my thesis is proved incorrect, and that's where my stop will go. So it's very much a roadmap. I use Fibonacci's, combine the fibs with the Elliott waves, and the relationship between them gives me clear price targets and gives me clear invalidation levels.
All right, so let's talk about those price targets, as you said, when it comes to silver. Hopefully we can pull up that chart once again.
So looking at the gold chart, you can see just before where the one is, that decline that we saw, that was off the back of Corona, where we saw illiquid markets, we saw gold, cryptos, stock markets sort of fall. And from that low, we have labeled one. You can see the 1, 2, 3, very much almost a move in a straight line. It's not unsuspected that we've sort of slowed down, but in essence, that move, we have very much, if you look at the technicals, we hit very peak techs at that level, which is expected of a third wave. And we've moved in a holding pattern very much while the technicals have all reset themselves and essentially provide the energy that we need to push higher in that fifth wave. So you can see on the chart that from where those November lows are, the structure is not clearly impulsive, and that's why I can't rule out one more lower low into the sort of deeper into that purple box. But as long as we remain above that level where the one is, where that high was, I do anticipate us moving into the purple box above. So very much to summarize that, you can see the two purple boxes on the screen. As long as we ideally hold the lower box, the support box, I expect us to push higher. Now, that 2,150, 2,250 level, that's actually only the fifth wave of the third. And I do anticipate another fourth wave, sort of similar to what we've seen there, and another push higher towards the 2,500 level before we top out and get a more significant correction.
All right, Greg, we're going to have to leave it there, but we'll get you back in the studio once again. And thanks so much for joining us.